Until last year, Indian markets have been tepid as economic growth slowed to a decade low of 5%. That battered Indian corporate sentiment and thwarted capital investment. In that environment, only 30 companies listed between 2012 and 2013. But the improved market sentiment is bringing companies back to the market for cash. Early this week, India's second largest private sector bank, HDFC, announced its plan to raise up to $1.69 billion. Similarly, United Bank of India, Indian Overseas Bank and GMR Infrastructure have decided to raise funds.
When the markets are good, markets are buoyant, people want to raise money. That's why a lot of IPO come in, and also investor would want to invest in markets. If we just look at 2007, which was the golden period for IPO, we had close to 90 odd IPOs. After that, we all know the market crashed and the IPO market also dried up. Now we believe there is a bull market going forward. We are expecting that next 6 to 8 months, Sensex should hit close to 27,000.
And as the incoming Prime Minister Narendra Modi promises to improve the country's fundamentals, analysts expect new listings to come from the economy's core sector.
Definitely the infrastructure sector, banking, agriculture. And the reason is because if you just look at Mr. Modi's past in Gujarat, the Gujarat model, it really focused on these sectors. So investors are looking at Mr. Modi kind of translating these same sectors onto a national level.
Companies are also being encouraged by the run-up in the stock market, a trend they expect will continue as risk appetite returns.
From here, we believe equity market will just outpace all the other asset classes in terms of returns what we'll get, because we have already seen 6 years of bad markets, and that's why we believe the market should move up, and this will give you the highest return vis-a-vis your gold and vis-a-vis your real estate.
The rush to raise capital comes against the backdrop of rising debt levels at Indian corporate entities. The money could help companies retire debt, make new investments and kickstart projects. That could be a catalyst for economic growth. But just borrowing money isn't enough. Companies seeking capital would need to demonstrate their ability to service the expanded equity by way of faster profit growth and higher dividend. Madiha Mujawar, Channel News Asia, Mumbai.